So, who's still around then? If you're watching this video right now, congrats. You're built different because this cycle has been an absolute killer. I've never seen the state we're in right now in my 6 years in crypto. Nothing compares to how empty, negative, pessimistic this space feels. Not COVID, not the lunar crash, not FTX. It's actually insane how down bad everyone is. If you're still keeping up to date, despite the strenuous market conditions, honestly, hats off to you. I know many would have given up months ago and will only return when the good times do. By being here now, you're maintaining an edge. You might not feel it yet, but I promise it'll pay dividends in the future. What's up, people? I hope you're all doing spectacularly well. It's been a few weeks since the last market update video. I haven't been gone. I've been putting out thoughts on X, Discord, and via my weekly newsletter. Videos are usually the best method of communication, but also the most time consuming. We'll cover the usual suspects today: Bitcoin, macroeconomics, Ethereum and altcoins. Had lots of news coming out recently, so much to cover. As always, thank you for clicking the video. If you haven't liked and subscribed already, please feel free to do so. It really helps out the channel and I'd appreciate it very much. Cheers. I don't think we really need to get into too much detail about November. It was absolutely shambolic for Bitcoin. It saw us drop from over 110k all the way down to $80,000, the lowest since April 2025, in and amongst the tariff drama. This slide was weird though. Back then we had a clear catalyst. All the markets took a hit. It was a fundamental choke. However, the recent price action doesn't seem to be attributed to one direct event. I know people are using various theories, other countries' macro positions, whales taking profit, the natural 4-year cycle conclusion, which I don't agree with, by the way. I provide evidence as to why it could be changing in my previous video, so check that out. But nothing clear cut. This doesn't even seem like it was linked to the October liquidation. But this leads us to the conclusion, is this market manipulation from the big players? Billions of dollars of liquidity was taken out in the last few weeks. People won't learn from this lesson in this regard. December also has got off to a strange start as well. Initially we dropped from 90 all the way down to 85k, with fear spreading fast around China banning crypto for the billionth time and FUD around Tether as usual. Then we bounced back hard, getting above 94k, with some people calling for a relief rally. And now we've slumped a bit further down again, sitting at around $89,000. This all seems mechanical to me, artificially engineered. With the macro developments we've had, it makes no sense for this market to be suffocating the way it has. So one thing I've been sure to mention throughout this entire year is the 50-week moving average. I said many times consistently that this would be a good indicator as to whether we continue the greater bull trend or drop into bear market conditions. We can see here how many times it has been respected so far this cycle, but the trend was broken in November, quite violently too, and we've shown little signs that we'll be able to recapture it anytime soon. I'm definitely taking this into consideration in terms of gauging where we are in this cycle. It does kind of imply that we have seen the top for Bitcoin up here at around 125k, and at best we could have a relief rally, potentially pushing us back up to 100k, maybe pushing the range low of 110 at best. But it's not ideal, I know, but we have to put our hopes and dreams aside when using technical analysis. When it previously broke at the end of 2021, we did recapture it and go on a mini relief rally from 37 to 46k, but the momentum died out and we went full bear mode right after. Bitcoin did well to not close below the 100-week moving average and in fact bounced strongly off of that support, so it wasn't all bad, but yeah, from a technical perspective, using this indicator, it isn't looking great. I ain't going to try predict the future. A likely outcome I'm seeing many speculate right now is you'll get a rally in the coming weeks, maybe towards the start of the new year too. As just mentioned, it could get us back above 100k, which is a key psychological level. A new high from where we are now, it seems unlikely. Not impossible, but unlikely. The fundamental analysis is not aligning with the technical charts. It's a strange situation where the bears will only see the bearish outcomes and the bulls will only see bullish outcomes. When you're neutral and objective like myself, you can see both, which is frustrating in a time where stocks have been performing well, but crypto has decided to capitulate all on its own. Quick break to ask, why are you not part of the best free community in crypto? Join over 1,000 people determined to make money and help each other out. Sign up to the email newsletter too, it's all free, you've got no excuse, link down below. The ETF inflows have really dried up in recent weeks. The net flows have been primarily negative, and on the days that they have been green, it has been a drop in the ocean compared to the past. Where is the liquidity going to come from is the question everyone is thinking about. And this is all in spite of bullish news which is still coming out. For example, Bank of America opens the door to Bitcoin via its ETFs and proposes anywhere between a 1 to 4% allocation of your portfolio in this asset class. This is major news and allows 15,000 financial advisors to offer this product to their clients in America. We in the UK are very, very far behind in this regard. Historically, December hasn't been a great month for Bitcoin. That whole Santa rally shit is seemingly a myth, given how the median returns for the month are negative, and 7 of the last 12 Decembers have been red. Still, people can hope. One thing we can agree on, it most likely won't be a worse month than November. I said earlier that the technicals aren't matching with the fundamentals, and that's because fundamentally, we're looking kinda bullish. On December the 1st, we had the official end to QT, the end of the Fed shrinking their balance sheet and choking liquidity out of the economy. We have been crying out for this all cycle long, and it's the first time in years that this has happened. From my previous video, I'm in the camp of this market being primarily liquidity driven. So if we end the one policy that was restricting liquidity, how can that be a bearish thing? Because I've covered this all already in detail before, I'll keep this brief. But a bull year in crypto, by which I mean the end of the 4-year cycle, 2017, 2021, and now 2025, has never taken place in a contractionary policy economy. Now, is that coincidence, or does that align with the liquidity theory? The last time the Fed ended QT was 2019. This was just before crypto rocketed upwards within the next 12 to 18 months. Albeit, COVID caveat, near 0% interest rates, and QE all contributed heavily too, as they brought the liquidity. There has been no official confirmation of quantitative easing beginning yet, I'm just seeing rumours. People speculating it will happen at some point in 2026, others saying it's already happening stealthily behind the scenes, evidenced by injections in recent months. I think it's too early to say, but that would be a dream scenario for risk assets, especially altcoins, which have been starving. Trueflation has inflation cooling slightly, which strengthens the argument for the Fed to again cut the rates. This is reflected in the 86% chance of a 25 base point cut in a few days. Again, I don't see how this isn't bullish for risk assets. The effect may not be instant, but bringing the rates down encourages investors to spend, invest, decreases the attractiveness of saving and holding cash, also reduces bond yields, again lowering demand. It reduces interest repayments, which means more disposable income and liquidity in the economy, and risk assets as a whole should benefit hugely. That's the logical theory anyway. There's also a new Fed chair coming in for 2026 to replace Jerome Powell. It isn't confirmed yet, but I would expect it to be an individual who's a lot more dovish than Powell, which will bring positivity to the markets, I'm sure, in terms of setting up strong macro environments for positive returns. Global liquidity may be breaking out of this sideways range we've seen for the last few weeks, but we have to wait on more data. It would make sense, to be honest, given the easing of macro conditions, end of QT, and potential QE beginning in various economies. Whilst the correlation may not be direct on this chart, we know that high liquidity is good for risk assets, obviously. Ideally, we would also see a breakdown in this uptrend for the dollar. With the interest rate decision in a few days, I expect this to continue to fall, especially if we get a speech dictating the Fed's objectives for 2026. If they sound dovish and imply further cuts, the dollar becomes a less attractive investment, and therefore investors will be more willing to rotate into alternative assets, one of which being stocks. The S&P continues to perform well despite the blip seen a few weeks back around Nvidia's earnings report, which came in strong. This is primarily pitched up by the Mag 7 and tech stocks, which make up roughly a third of this index. The top 7 companies attributed to 54% of the S&P's gain over the last year, which means 493 companies did fuck all. You can see how this concentration brings about fears of the bubble being burst. So Ethereum has actually held up well comparatively. With everything going on, to still be loitering around the 3k mark shows that not all hope is lost. It's not great to see ETH's price in the 2000s, but with the FUD and lack of liquidity, it is to be expected. The chart actually represents cryptos in general pretty nicely. Look how quick we exploded up earlier in the year, and look at how we came back down just as fast. 2 to 3 candles and everything changes. For that reason, remember that we could also go the other way. Technical analysis on ETH is ambiguous. If we get the relief rally in the coming weeks, I'd expect this to make a push to the range lows, maybe around $3,500 to $4,000. 4K has proven to be a strong resistance level in the past, so not entirely sure if we break it again. It just depends on the liquidity, I guess. But that pump would provide further relief across the other altcoins as well. I was hoping earlier in the week we'd be able to recapture the 50-week moving average for Ethereum, but that's looking unlikely with the close in a few hours. Above 3k would be decent. As expected, just like Bitcoin, the inflows for Ethereum have been pretty shit lately, reflected in the price, and December again just historically hasn't been a great month. But yeah, as mentioned earlier, Ethereum's strength relative to Bitcoin has been surprisingly good. We're actually positive in the last couple weeks, even though it may not feel like it. Closing above the 50-week moving average would be a nice trend to reclaim, and it definitely implies investors certainly see the attraction of ETH as an investment still, perhaps thinking it provides a stronger ROI than Bitcoin. Bitcoin dominance continues to stay within the 59 to 60% range. I've seen guys like Benjamin Cohen saying we have to go higher for Bitcoin dominance, potentially going into the 60s once more. I bloody hope not, to be honest. A further alt bleed out isn't really what anyone needs, but at the same time, I'm struggling to see what will cause a breakdown in this dominance in the short term anyway. Ethereum supply on exchanges is at its lowest levels since 2015, since the token first launched. This could result in a supply squeeze, and it's due to a combination of factors, most of which I'm seeing are staking related. Holders and investors are just locking up their ETH and capitalizing on the yield, which is, it makes sense. The network continues to develop with the Fusaka upgrade going live last week, and whales continue to keep accumulating Ethereum. If you had any doubt on the future prospects of this chain, hopefully news articles like this help to solidify that ETH is definitely here to stay. We didn't have the explosive break past all-time highs like we've seen with Bitcoin, where ETH was expected to smash past 5k, 6k, etc. But that's not to say it won't happen at all. Liquidity could really change the game here. Now, to end the video on a more positive note, altcoins have been fucking shit. What's new? The others index is at lowest levels since April time again, which, to be honest, provided an excellent entry. I bought some of the dip back then, and I've bought a little bit more now too. Not crazy amounts and not in ultra high risk projects, just ones I'm confident in. The theme of this video has been liquidity, guys. It's literally the oxygen in this sector. Without liquidity, these small caps, mid caps, even high caps aren't going to perform well. Uncertainty plus an illiquid environment are literally the worst possible conditions. Investors are probably thinking, why should I take the risk in crypto, which has performed terribly all year, when I could just buy shares which are safer and also outperform? And to be honest, with that logic, you really can't fight it. We have only recently made the exciting leap from extreme fear to just regular plain old fear. The recent stint in the extreme was the longest this whole cycle, literally going down to a level of 10. Again, with no clear source to blame, it's pretty crazy. Could this be the point we look back on next year and think, wow, it would have been a great time to buy crypto? Who knows, but it's bloody frustrating, innit? For my investments, I have stuck to what I have high conviction in, as I have done all year round. Ethereum is at good levels, especially for the future, and is a solid play. Even Bitcoin currently, to be honest, if you have higher capital, or if you wish to set up a daily or weekly DCA strategy. The asset is down 30% from all-time highs. How is that not a good price? In terms of altcoins, BitTensor sub $300 is a good price too. Be wary though, as we are around its halving event, so price could be volatile. However, for the #1 AI project, this is a good level. Anyone's price has really shocked me, but in a good way though, as it allows me to buy more. The privacy narrative is going nowhere, neither is Deepin, and when you merge them into something with real-world utility, you get this project. One of my favorites, and $20 million market cap is just so dumb. Similar to Chex or Shintai as well. I made a video on this a couple months back, and of course we have slid down a lot since then. However, in the last week it's up 35% as BlackRock begin more talk on tokenization and RWA, another narrative which ain't going anywhere. And should the wave come back, I reckon Chex will be an outstanding performer. But yeah, for most of you, doing nothing is also a strategy in itself. Stay patient, analyze the market for opportunities, keep up to date with macro news, and remain calm. When emotions get in the way, that's when the biggest mistakes are made. Using this time to do research so you don't make the same mistakes is ideal. That's what I've been doing. Lessons to be learned always. But yeah, thank you all for watching. It really means a lot to me. Please subscribe, like, and join the Discord. It's all free, and I'll catch you all in the next one. Take care.